Good day, subscribers. Thank you so much for joining me today. I am Jeremy, and this is the Financial Education Channel, and we're talking about 3 stocks to buy that are over $100. Now, I got this video idea because about 2 weeks ago, I did a video about 3 stocks to buy that are under $10, and I thought, why not do one that's stocks that are over $100? Now, as you guys may know, 2 of my favorite stocks that I'm actually invested in right now are actually over $100 stocks, but I'm not covering those today because I want it to be original. I want to do some stocks that I like that aren't the usual stocks I cover, because one of them's Apple and one of them's Wynn Resorts. So I just push those to the side, and I did not want to talk about those today, so I picked 3 random stocks that I also like that are all over $100. Leave a thumbs up if you guys enjoy this video today, and let's get into this. So stock number 1 is a company named Goldman Sachs. Goldman Sachs, you guys may have heard of. A lot of people don't even really know what Goldman Sachs does or what they are, so let's go ahead and get into Goldman Sachs and give you a brief introduction to Goldman Sachs. Goldman Sachs is a leading global investment banking, securities, and investment management firm that provides a wide range of financial services to a substantial and diversified client base that includes corporations, financial institutions, governments, and individuals. Now, most banks, I'm not a huge fan of investing in banks. I just don't like it because their balance sheets are very confusing. It's hard to see where money's coming, where money's going, because they're so big. Some of these banks are so big. Goldman Sachs is the only bank I've ever wanted to invest in or ever been invested in, just simply because I can understand their business model a little better than the rest of the banks. The rest of the banks are very confusing. So Goldman Sachs is basically, they'll take your money and invest it if you're a super rich person, so meaning you got tens of millions of dollars, hundreds of millions, billions of dollars. Or if you're a big corporation, they'll help you invest. If you're a major government, they'll help you invest your money, all those kinds of things, and try to lead you in the right way. They get paid based upon that, and that's how they make most of their income. That's how they do it. They also lend money and things like that. They're a little more confusing, but they're not as big as some of the other big banks as far as lending money goes. Mostly they do investments, and mostly things like strategize with you. Okay, we can hedge a position here, we can do this, do that, and they're very well run. They're I would say, in my opinion, they're the best well-run investment bank in the entire world, guys. They really have their crap together. They're well connected with government and all those things. They're just really well run by Lloyd Blankfein, the whole management team over there. Best bank, in my opinion, without question, as far as investment banks go. So let's look at this income statement here, guys. So we can see revenue has actually been going down a bit. It went up a little bit from 2013 to 2014. Then it went down last year. And look at how net income, which is toward the bottom there, look at how his net income's, suffered from all the way, almost 8 billion. Well, I'm looking at net income applicable to common shares, so you guys know. 7.7 billion they did in net income in 2013, up to 8 million in 2014, and all the way down to 5.5 billion last year. So you can say, Jeremy, why the heck would you want to be, interested in a company that the revenues went down and the net income went down so substantially? Well, that's the past, and we're going to we'll look at the most recent quarterly results, and you guys will kind of get a mindset that maybe this isn't as bad as it looks here on this income statement the last 3 years, because last year was a really tough year, especially in the second half, with commodities just suffering. Commodities just got killed, which is important. The stock market went nowhere. It actually went down, which the stock market going up is a very good thing for Goldman Sachs. And a lot of companies that may have done IPOs, which is something Goldman Sachs deals with, when companies go public, a lot of companies actually pull back on that for the second half of the year. So that affected Goldman Sachs very negatively, and that's why their net income suffered huge. That's why their revenues suffered. So the whole second half was just a mess for Goldman Sachs last year, and we saw it in the global economy. China slowed down. We saw a lot of the emerging markets slow down. So things are changing a bit. Things are getting a little more positive now. Let's go ahead and look at their balance sheet. Now, balance sheets for banks are very different than regular companies, guys. They have $252 billion in cash and cash equivalents, $466 billion in long-term investments. They have short/current long-term debt of $128 billion. They have long-term debt of $200 billion. Balance sheet for banks, I don't they're just not the way, you can judge a balance sheet from a regular corporation, because really, how do we know how much cash is really Goldman Sachs cash versus how much money is their customers cash? Same thing with long-term investments. How much of that money is actually Goldman Sachs long-term investments versus customer investments? That's why I said I'm not a huge, a big bank fan, because the balance sheets are very hard to understand. How much of that debt is actually Goldman Sachs debt versus their customers' debt, and all those kinds of things. It's very confusing. So they do have $86 billion in total stockholders' equity. That's the main thing I pay attention to when it comes to banks, because the rest of it's just not judged the same way we judge a retail or electronics company or any regular business. Banks are just judged differently. So, look at this latest quarter they reported here, guys. Blowing numbers out. In Q3 fiscal year 2016, Goldman Sachs total net revenue surged to $8.17 billion from $6.86 billion in the prior year comparable quarter, outperforming Wall Street's consensus of $7.42 billion. The company has posted its first double-digit year-over-year growth in the last 6 quarters as the bank's fixed income, currency, and commodities revenue surged 34%. Let's go ahead and look at that last paragraph there. The Global Investment Bank reported net earnings of $2.1 billion, or $4.88 per share in Q3 fiscal year 2016, compared to $1.3 billion, or $2.90 per diluted share in the last year's quarter. So we see here, guys, things have turned around very well for Goldman Sachs. The revenue is surging. And net income is up substantially. What is that? Almost 50%? The net income's up here, guys. Huge numbers. So we can see the turn for Goldman Sachs has certainly come. It is monstrous the way they've turned around, versus where they were at in the second half of last year. And we've seen, some things play out. The worries about the global economy have kind of gone away. IPOs have come back a bit now. And oil prices stabilized, still very low compared to where it was 2 years ago. But it's stabilized and things like that. Stock market's near all-time high. So all these types of things are helping Goldman Sachs greatly. So as long as the economy stays decent or even picks up a bit, Goldman Sachs is going to definitely reap the benefits of that. So let's look here. Goldman Sachs is at $223 where it closed out at today. That's toward its 52-week high, so that kind of stinks. I wish we could have bought it when it was $138. Market cap of $93 billion. PE currently of just under 18. They do pay a small dividend, about 1% and 1.2%, so very small dividend. Forward PE of 12.5, and that is why I really love Goldman Sachs, guys. That forward PE is so low, and I look at the global economy, and I see just growth picking up a bit. I don't necessarily see anything going gangbuster anytime soon, but when I look out, I do not see a recession coming anytime soon. You never know when one can come. They can just pop out of nowhere. But in my opinion, I don't see anything on the time horizon anytime soon. So that's why I love Goldman Sachs, and trading at a 12.5 forward PE and being the best run investment bank, in my opinion, it's my number one stock that's over $100 that I think is worth taking a look at. Number 2 stock here, guys, the Home Depot. Now, for you guys that do not know the Home Depot is a retailer that sells all types of home improvement things, drills, hammers, lawnmowers, flowers, about anything you can possibly think of that will go into a home to renovate it, to build it, anything like that. That's what the Home Depot sells here, guys. Now, you understand Home Depot's business model. They need to buy something from their sellers. Someone sells them a hammer. Oh, we're going to sell you 1 million hammers, guys. And Home Depot pays $10 for those hammers, and they go ahead and sell them for $16. That's the business model of retail. That's a business model of Home Depot. Let's go ahead and look at that income statement and see why I'm so excited about Home Depot. So 2014, $78 billion in revenue. 2015, they did $83 billion, and last year they did $88 billion in revenue. And then go ahead and look at the bottom line. Their net income grew from $5.3 billion to $6.3 billion to over $7 billion last year. So we can see Home Depot, despite them not opening nearly as many stores as they have in the past, their revenues are growing great. Their net income is growing great, and they're just knocking it out of the ballpark as far as this goes, guys. Home Depot has been one of the retailers that's been the least amount affected by Amazon. Amazon's just been stealing market share away from pretty much every big retailer out there. Home Depot has been able to fight them off very well based upon their pricing, based upon how many locations they have, all those types of things, based upon the fact that you can go into a store and ask somebody a question versus Amazon, which is a little more confusing because you're online, you don't have somebody there to actually speak with you and say, oh, you're going to need this drill bit for that, or all those kinds of things, guys. And then the fact that housing's come back pretty strong in the last couple of years. I would say housing's probably the most strong it's been since, I would say, the mid-2000s, and it's not quite there yet. It's not where it was in the mid-2000s, but it's come back the strongest since then. That plays in very well to Home Depot because Home Depot is dependent upon people building houses and people renovating their houses. So the fact that real estate industries come back pretty decent now is helping out Home Depot greatly. Look at that balance sheet here, guys. I'm not a huge fan of this balance sheet. $2 billion in cash flow, $2.2 billion, no short-term investments, no long-term investments. And then you go ahead and look down here, they have about $427 million in short/current long-term debt, and they have over $20 billion in long-term debt. I don't like this balance sheet at all. I think it's a really crappy balance sheet. I would love to see a lot more cash. I would love to see a lot more investments. Just, it makes me feel better at night. What if they do struggle somehow? When you have a balance sheet that has that much debt versus that much cash, it's just not a good balance sheet. It's not a good look. The good thing for them is they're making over $7 billion in profits at the end of the day. So they could probably pay that debt off pretty fast if they really wanted to, cut down on the dividend. But at the same time, I would love to see a better balance sheet. It does not have a great balance sheet in my opinion, not at all. Look at this latest quarter here, guys. Net sales grew 6% year over year. Net sales grew 6.1%. Go ahead and look at net earnings, which is toward the bottom there, guys. It grew 14.1% net earnings. And go ahead and look at that last line down there. Basic earnings per share grew 18.4% from $1.36 last year to $1.61. So we see Home Depot is just experiencing great growth in that bottom line. They're experiencing pretty strong growth even in the top line. To grow 6% year over year, it's nothing to sneeze your nose at. I'll tell you that much. And 18% to basically have your earnings, your EPS go up, that is a fabulous number. So Home Depot is a very well-run company, guys. And let's go ahead and look at it and see if it's a deal as far as all that goes. So the Home Depot trading at $129. The 52-week range is at 109 to 139. So it's toward the top of the 52-week range, but it's still a little under that. $158 billion market cap, PE of 21 currently, a dividend yield of over 2%, and then we have a forward PE of 18. So I look at Home Depot and I see a forward PE of 18. I see, a decent dividend yield. I see a balance sheet that I don't really like, and that's kind of the one negative thing. But I see a company that grew EPS this past quarter by 18% and was earning, $5.3 billion a couple of years ago, and now is earning over $7 billion. I see, the housing market getting stronger, in my opinion, at least as far as, people renovating, those kinds of things right now. And I look at Home Depot and I say, that's definitely a stock, in my opinion, is worth investing in. That's over $100 once again here, guys. Stock number 3, Facebook. Facebook is stock number 3. They are over $100. For those of you guys who do not understand Facebook, Facebook is a social media platform. They have over 1 billion users. They also own the Instagram brand, which is just growing insane. They own Messenger. They own WhatsApp, which has over 1 billion users. They own the Oculus Rift, which is a virtual reality technology. So they own some of the biggest social media platforms out there, guys. The amount of users Facebook has is in the billions, which is ridiculous because there's only like 7 or 8 billion people on the entire planet. So the fact that they have billions of users using their different types of social media or apps and things, it is absolutely incredible. But Facebook, I love not just because they have a lot of people, but because they're actually monetizing those people now. And we're going to look at some numbers here, guys, that are just going to baffle you. They're going to blow your mind. Look at this here, guys. 2013, $7.8 billion in revenue. 2014, $12.4 billion in revenue. Last year, just under $18 billion in revenue. Go ahead and look at that bottom line there, guys. $1.4 billion in net income in 2013, $2.9 billion in 2014, 3.6 last year, and that's even with them growing R&D by $2 billion year over year. So I look at Facebook and I'm like, this is a huge growth company, not necessarily in users anymore. The amount of new users coming onto Facebook is slowing, but the amount of revenue that's coming in to catch up to all these people that have come onto their platforms over the past years, It's just money's just flowing their way in an insane rate. We can see that by the 3-year income statement here. Absolutely amazing. Balance sheet wise, this is a sick balance sheet. $5 billion in cash and cash equivalents, $13.5 billion in short-term investments, no long-term investments currently, short/current long-term debt of $224 million, and long-term debt of $107 million. So we can see that's just a sick balance sheet, guys. They have something like $17 billion more in cash and investments than they do debt. That is ridiculous. They have a sick balance sheet, well-run balance sheet there, guys. Now look at these latest quarterly results. This might have me the most excited about everything. So advertising revenue year over year change, look at that, 59%. Are you flipping my flapjacks? 59% advertising growth, unbelievable. Then go ahead and look at the bottom there. Net income grew 166% year over year, from $896 million in 2015 to $2.37 billion last year, or excuse me, this year in the latest quarter. 165% net income growth, guys. That is ridiculous for a company their size. If say they slow down substantially in net income, say next year they only are growing at 100%. It's still 100%. If they grew at 100% next year, in this quarter, they would do $4.6 billion in revenue. So we can see, even if these growth rates slow, when you're growing that fast, when net income's growing that fast, even if your rate slows, you're still going to be growing by huge, monstrous numbers here, guys. Unbelievable what Facebook is doing. Now, let's look at their 52-week range. They're at $115 right now. Their 52-week range is $89, $133. They're a $332 billion market cap, so a huge company, one of the biggest in the world. PE of 44 currently. They have a forward PE of 22, and that is why I love Facebook. When you're experiencing net income growth of 165%, you're trading at a forward PE of 22. You have a balance sheet that is just silly nice. That makes me really excited about Facebook. And secretly, I'm hoping Facebook stock actually drops, because I would love to start investing in this at some point. Even at this price, it's still a good deal. I like a few stocks better than it, that I talked about in the 3 stocks to buy video. But still, I look at Facebook and I'm just like, this is unbelievable. This is unbelievable growth. And it just shows the vision that Zuckerberg had, and why he didn't sell it when he could have sold it way back in the day. And, people have come and gone, and people didn't understand Facebook's model and whatnot. And he was just calm, and he was just like, someday you guys will all see. We're seeing it right now. 165% net income growth in the last quarter. Unbelievable. So guys, I hope you enjoyed this today. 3 stocks over $100 that, are worth taking a look at, and you may want to invest in. You may want to, research some more for yourself. If you're watching this video today, guys, and you have not subscribed yet, you may want to. I talk about personal finance on the channel. I talk about entrepreneurship. I'm an entrepreneur. I give entrepreneur tips every week. And we talk the stock market the most on this channel out of everything. Leave a thumbs up if you enjoyed this video today, guys, and have a great day.